It's Quant Trade Edge, and I wanted to get my wrap-up done early today, so I had some thing to take care of in the afternoon. We've had many Forex setups today, and plenty of other things that will teach you the nuances of market structure. Let's start with Crude. Crude, this bar to me actually looked like a better setup for a long trade. But, given the news and the way the market reacted over the weekend, we broke previous day low. And, right from the open, this was the Sunday night opening bar. That was a very impulsive down bar. So we broke the low at 1:30 a.m., which is roughly the European open time, right, between 1 a.m. and 2 a.m. Central. And immediately, and I'm going to show you a couple of things that will, hit back on things we've said. We got an A, B, C up, and guess what time we got our C up? On the 4 a.m. bar. Crude just has a habit of making an extreme on the 4 a.m. bar, and it did it again today. So if this is our risk bar, 109.92, I believe, about 60 cents. It was down to about 105.60. I want to say was about 4R. So a couple of things happened here. One is we had a really nice ABC pattern. It met our time criteria of hitting at a very normal time for Crude. And then after the open, we even got this little pushback tail just heading into the pit open. This is the 7:30 to 8 bar. So, just ahead of that, if you missed the 4 a.m. bar, which, I did, I was asleep, you have another opportunity as you get this push up just before the open. And, that went on and made 4R. Now, there's kind of a market cycle to this, and we'll get into that more with our next example in the Australian dollar. But before we get off of Crude, I want to show you a couple of more things. After we made this extreme at 9 a.m., I'm sorry, the extreme was actually here at 8:54. We had a very clean two waves up again. And let me blow this up just to make it painfully obvious. Up, down, all the way up to here. So then this became the risk bar. And we got over 3R to the downside here. And I was only really looking for a marginal low at this point, and we got that marginal low. Because I think it also coincided on the daily chart. If you go back to the daily and do a Fibonacci from here to here, that hit right at the 61.8. So the earlier morning target was down at the not the 61.8, the 0.50. So that was an area I was looking for when we had this. Now I want to reiterate the power of U-turns. If we go down to a 1-minute chart and blow this up again so you can see the bars very clearly. This is the low we just made off of that 3-minute ABC up. And you will see how clear these U-turns. No idea why this doesn't work. There we go. So here is an A, B, C up. And as soon as we take that out, look at the thrust we get. This high is 104.93. This high is this up here is 105.84, 105. So almost $2 with no heat, just straight up. And then you can do the same thing for the 2-minute chart. And here the waves look more like this: A, B, C. And then once we had this down bar, taking this out is a 2-minute U-turn. And, this is 106.85, 107.50. We're still going up. We're at about 80 cents now on this 2-minute U-turn. And just to show you that, this isn't random and cherry-picked, I want to go back and show you everything that's happened this morning, since we started falling. Let's clean this up. So the pit open was around 8 o'clock right here. But we could start from this test up just before the pit open. Let's see. I guess this is all kind of a hoagie here. So we've got a move here, a move here, a move here, a move here, 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 here. Now what do we have? We have an A, B. Now this is a hoagie here. So A, B, C. So had we taken this out, that would have been a U-turn, but that never happened. Now let's keep going. Down, up, down, up, down, up. So we're only having these one-legged moves back up. Down, up. This is a new low. Up. A new low, one leg up. A new low, one leg up. A new low, one leg up. A higher low. So this is now our ABC, and we got a U-turn here. They got some traction. This 105.73. We got all the way up to 106.49. So about 70 cents of traction on this U-turn. 75, 76. So this is the first valid U-turn that we had, and it did eventually roll over and fail. But you could see how if you're looking to pick a bottom, you don't do it anywhere here. At the very least, wait until you have an actual U-turn. What just happened there? And at least you have, some of the odds in your favor. In this case, it eventually rolled over. And let's start again where we've made new lows again. Here we've made new lows, and this is our A, B, C up, and then this was our U-turn that got a lot of traction. Got a couple of bucks to the upside. In fact, it's still technically going to the upside off of this 1 minute U-turn. So this was at 104.93. We're closing in on $3. And your risk would have been relatively tight. When you broke this, you could put your risk down to here, 104.57 against 104.93, about 40 cents of risk, and you're up almost $3. So that's the power to watching the structure, and that's why I get really anal about these, little hash marks. They actually matter. So anyway, let's move on to the Australian dollar. Now, here's a situation where we've been watching this for a few days because it has been overbought. And, an objective way to say that is the 2-period RSI was above 95. So it was above 95 here, it was above 95 here. And so we're already looking for some sort of pullback. And when you take it down to a 120-minute chart and look at the 14-period RSI, you can see that when we barely tested above this at 3 a.m., it was on much lower momentum than the high from Friday. So this right here has numerous names. You can call it a 2B. That's what Speriando calls it. It's just a trap. Basically, we tested up and failed, and a divergence is your first part of the cycle. The earliest people will catch the divergence and get that move down. The second thing that sets up is the U-turn. And if you look at a 30-minute chart, from that high, we had a very clean A, B, C. And when we took out 75.17 and a half, that was a 30-minute U-turn. So first you had the 120-minute divergence, then you had the 30-minute U-turn to get in, and then the Forex Trade is the next thing that pops up. And, what I like about the Forex Trade is by the time you get to the third trade of the move, it's a high probability trade. The divergences can get run over. You can keep trying to pick a top and get run over. With U-turns, they're a little better, but sometimes the risk isn't tight. So what I love about this third entry that I call the Forex Trade is that it gives you a tight risk entry and a high probability of success because the tide has already turned. So in this situation, because we got the break at 8:06, pretty much already into the trading day, I used a 3-minute chart and got this very clean A, B, C, and this risk bar was extremely tight. So this risk bar is only 3.5 ticks. So 4x would be 14 ticks. That would be 74.81, and we got that pretty quickly. So I'm going to do a more detailed video on the entire cycle so we can see all the trades. You start with a divergence on the one side, then a U-turn, then the Forex trade, then a continuation trade, then divergences start to form the other way. And you have the cycle the other way. And this is, basically your, 3 to 5 day Taylor cycle. So it's interesting to see how the two fit in together, and you can piece the smaller time frame components into the larger time frame Taylor. So that was about it. There was just one other beautiful pattern. It was the Tesla volatility compression pattern. So Tesla is doing something that I call the TUP, and I call it the TUP because I first noticed it on Tupperware stock. And that is when something is levitating, like this is levitating. And I call it, I use the 2-period RSI to be objective again. And, we've had, this day was almost at 95, but then we've had 1, 2, 3, 4 days at 95, that first dip. And although this candle is green, it was a lower close. This closes about 10:14. This closes about 10:10 or 10:11. So this was actually a down close, and hence we got this big gap up. And we typically will get a second leg out of this TUP pattern. But going back to what we've gone over before here on the volatility compression, there are two things to notice. One is we look at the ATR3 divided by the ATR20, and we're looking for readings below 0.7. And then on the volume, so this was kind of our setup pattern. So, if you've studied the cup and handle pattern, the William O'Neill stuff on a daily time frame, it's basically the same thing on, this time on a 1-minute time frame. We've got kind of a pattern here, a cup and a handle, inverse head and shoulders, whatever you want to call it. And the big clue that we get is, was on this bar right here. And I posted it on Twitter. If you go look at my Twitter feed, I posted it right as it was breaking out at 9:42. This ATR is 0.65, so it meets the criteria. And then the icing on the cake is this volume bar. It's actually the lowest volume bar of the entire day so far. And that's exactly what we look for. We look for the supply of stock dries up here. Volume is completely dries up, and range dries up, and then boom, we get this move. And even if you waited for this breakout at, call it 1079 against 1072, $7, 1079, you got all the way up to 1096. So about 2 to 1 on this risk here. Let's see if that visually looks correct. Probably a little bit more. But again, these are one of my favorite patterns because you get very tight risk and tight compression, against that bar. So anyway, these are just a ton of things playing out on a Monday morning. More to come. Have a good rest of the day.